Hello and welcome to Growth and Value Stocks. My name is James Boyd. We welcome you here today. We've got Cameron May with us in the chat. Say hello, Cameron. Uh, you'll notice today's date, July 1st. Happy 250. And also, I believe it's Canada's birthday. Check me on that. Uh, Congratulations on that as well. Also, quick reminder that Friday, the market is closed. So we got today and tomorrow. And we want to kind of hop right in, kind of see some of the action we've been talking about the last 2 days as we had a quarter end. But then we're also going to kind of talk about some of the things we actually saw this morning. We'll talk about growth and value. And we might even bring up just a smidge of maybe, let's say, income, just a little bit. I mean, one example. So just understand that maybe some of our examples might pay dividends. We'll talk about those dividends in just a moment. But most of our examples, 99.9%, is going to be growth and value stocks. Now, but it's noticeable on this one that is an income payer example. Now, remember, Cameron and myself, we do post educational content on X. There's my handle. Cameron will post his handle in the chat that way you can click on it and follow him as well. Now, we'd like to welcome, we got Ricebird with us, Will with us, Jay Richardson, BJ, Scott, aloha back to you, and Farley and many others. So just real quick, let's go ahead and hop right in. Now, the examples that I talked about, the information I give is should not be considered individualized recommendations. They're examples. We're going to use those examples in the paper money software application. So the purpose of that is that we can learn together, practice some entries, exits, stop adjustments, targets, technical analysis, fundamentals, all of it. We could practice together as a class and we can learn good and bad. Now, also understand when we talk about, let's say, if we talk about income or dividend paying stocks, understand that those stocks may reduce or stop paying dividends. They could increase the dividends, okay? So the moral of the story is it's not maybe infinite, okay? Also understand when we talk about investing, investing involves risk. And when we talk about examples, we'll look at some of these growth and value and income styles. Now, I want to kind of start off with just real quick the SPX first off. Now, I want to kind of just show this just really quick, and I want to kind of see how many of you notice this. Type it in the chat if you notice this. So I'm just going to show you that I'm going to lead the witness, okay? So don't worry, we're not in court. So there's not objection, okay? But if I showed you, let's say, the Dow Jones list, CRM, Nike, Microsoft, IBM, many of these that are up the highest on a percentile basis, do you notice anything a little unusual with that? If I went down to the, let's say, the NASDAQ list, Meta, App, PLTR, MSTR, etc., Workday, do you notice anything awkward about that? Did you notice that in the first 5 minutes today? You should. You should be able to look at that list and say, those are not the ones that have been going up. And if you said that to yourself, that is a true statement. Meta has actually been one that's going down, and all of a sudden, July 1st, bang. MSTR, same thing. Been actually pushed down, a little up move here today. App was the probably one that's been turned up. PLTR in the same camp as the Meta example. And then if you look at CRM, okay, Nike, Microsoft, IBM, these are ones that have been aggressively sold down, and then over the last couple of days or just today, they've been starting to go back up. This kind of reeks a little bit of maybe portfolio managers trying to time some of these with the end of the quarter, the start of the quarter. Now, we're not saying that these are going to be our candidates that we look at, but definitely you're seeing some dip buying in some of these areas that could have been or were potentially oversold. Now, let's kind of talk about the ones we talk about, but that was different, okay? Now, the SPX, if we bring this up, the SPX kind of looks like it's in that neutral-ish range, right? Neutral's not bad. That means something's going up, something's going down, and there's an offset. If we look at the crossover, we're trying to get that price so far. Again, on Monday, we talked about intraday dip buying down to the midsection of the previous day, yesterday. Today, now we talked about that middle of the candle. Okay, now you're saying, James talked about on Monday. He said he was going to talk about Monday through Thursday, and I'm following through on that promise. Today, what we're kind of seeing is someone buying or investors buying in the midsection. The second level would be the open. So the S&P 500 still neutral to bullish. The nother thing that we want to kind of keep an eye on is the equal weighted. Okay. Now, again, I don't normally hit this as hard, but when it's so noticeable, we got to bring it up. The equal weighted index. Okay. Some of you might not know the SPX is top heavy technology. The equal weighted index where the 10 sectors represent 10% each. Okay. There's not a bias to one sector versus another. Utilities and base materials only 3% of the S&P 500. Here, it's everything is fair. Okay. 10% each, 10 sectors. Now, if you take a look at this, brand new high for the equal weight. Now, as bullish investors, that means that not everything is technology. Now, the second thing we're also going to bring up is if we look at, let's say, the dollar sign, there it is, that the number of stocks above the percentage of stocks, that are above their 200 period moving average, that kind of shows like an ascending triangle pattern. That's a pretty strong move here today. And the third one, you're going to see the percentage of S&P 500 stocks that are above their 50 period moving average. So whether we look at the 50, the 200, the equal weight, still showing some strength. Mr. Russell, show some respect. We're actually seeing the Russell here today. Okay. Bullish investors charging to the upside, smaller caps leading. Now, Kevin and I teach the ETF class on Friday. The Dow Jones, if we look at that is if we close here, this would be the highest close. How come I'm the only one that's happy about this? Type in the chat if you're happy about this. Okay. I mean, I feel like, just let me know. I just want to make sure we're on the same page. Now, so we showed the Dow here, small caps, S&P, NASDAQ. The one that we did not make mention of just really quick is the SOX. SOX, and again, this is where I kind of think we're seeing portfolio managers adjust the balance sheet, okay? You saw some interesting moves 2 days ago, and all of a sudden bounce right back. This is really at the tail end of the quarter, okay? It's going to show what's on the balance sheet. And then today it's actually down, really net, slightly higher than where we were Thursday, okay? But this is going to be something we want to really be watching over the next couple of days. Does this start to kind of move here? Now, the comment came in, it's the game of chairs. Well, sometimes what it really kind of comes down to is profit taking, okay? The other thing is what they really want to be investing in going forward. Just because they're selling, let's say, some stocks today doesn't mean they're selling all of their position, right? You don't know. They could have 3 million shares and they could have sold 300,000 of them. We don't know that. The more of the story, if we said, hey, game of chairs or whatever, it still goes back to we're not trying to catch the day-over-day movement. We're trying to catch the trend, okay? Now, the sectors, okay? Now, this is very important, so make sure we're listening on this. Communication, thanks to Meta coming back here. Now, remember, if the investor says, I'm maybe not comfortable buying an individual stock, no one said you had to. Some investors, they might just buy the sector itself or consider it. With the movement we saw in Meta, you could also include Google, which we'll talk about in just a second. That communication sector, which has been predominantly down, we're actually seeing in this case a little reversal back to the upside. The other area that we're actually seeing is the financials, okay? Now, if you look at, let's say, the financials, it's not just the financial sector itself, but if we said, is there an umbrella underneath the financial sector, an industry group that is actually showing us a little bullish move as well? Yes, and it is what? Now, if you're not aware of, let's say, the industry groups, let's make sure that you are. So if we go to scan just real quick, and you're going to see that right below scan stock hacker, we're going to say scan in. Now, when we go to scan in, it's going to give us by industry. Now, so if I said, well, I actually don't know what's in financials. There, okay, when we go down, and I'll hold this here, we're going to see that what is in there. And obviously, you're going to see that services, finance, capital markets, okay, insurance, and you're going to see REITs as well. So the biggest thing is underneath, let's say the banks itself, you got regionals. If you look at the regionals, there was a strong move today, probably stronger than the financial sector as a whole. Keep an eye on that. Now, remember, if those actually financials are strong, that's usually not a bearish indication in the market. Okay. Now, if we also, so the other one, I just want to make sure, just real quick, discretionary was also one that I think we would have to flag in terms of it fell down below support and it's starting to press back to the upside. So when we see the sectors, we should be asking ourselves what question? Number one, would the investor actually consider buying the sector itself? Second question would be, what stocks are leading the movement in here? Now, if I said discretionaries, I think everyone and their mother and father and uncle and aunt might say a small company we've never heard of before called Amazon. Now, I am not trying to beat the dead horse here, but I have said over and over in the last 2 days, look for these companies intraday in the first 15 to 30 minutes where they fall down to the middle of the previous day's range, the open of the previous day's range, or a moving average. And lo and behold, what do we get here? In the first 15 to 30 minutes, again, another example where the price falls down to the rising upward trending moving average and randomly the price goes back up. If you're trying to apply different strategies on a day over day basis, just different strategies, like many of them, maybe too many of them, you might consider stopping that. What you're going to find is some investors, all they do is they focus on flags. Then other investors just focus on diagonal breakouts. Other investors focus on horizontal breakouts. They might say, I just do breakouts, period. Other investors might say, let's say, I just do bounces, gap entries, or holds. Okay. Feel free to, let's say, focus on less. Whether those bounces or breakouts come in tech, discretionary, or utilities or staples, they are what they are. Okay. Now, I do want to also make mention of also the healthcare. That is actually the one, speaking of a league, if this is the Canadian birthday, you're seeing in this case, that is actually trying to really make the higher low. You should be asking yourself, what is maybe some of the bigger names in the healthcare space? Maybe United Healthcare, okay, among others. Real estate getting a little push here. That's fallen back down to the rising diagonal line. And the transports. Now, the transport, I don't like this. Okay, this index, Dow Jones Transports, it doesn't really show like the transports we show on Friday. Okay, so just maybe consider the one we talked about on Friday. Now, listen to the industry groups here before we look at our first example. Software, okay, cloud, cybersecurity. Have we said cybersecurity? Okay, we already mentioned regionals, biotech, aerospace and defense. Also with that is the airlines have been quite strong. And we would also include the dividend aristocrats. Okay. So when we say the dividend aristocrats, you might be saying, I'm not sure where you get the list. Well, maybe you're not sure yet, but let me show you where that's at. Now, if I actually go to that Market Watch and go to quotes for just a second, that dividend aristocrat list, companies that have paid dividends over 25 straight years, they're going to be in the public list. And if I look down that list, I might have gone past that. Let's see. Dividend aristocrats. And it might be on the, I made the list myself, but it actually might be in this. Visualize. Public, yeah, this is where it's going to get the list, and it's going to be dividend aristocrats. Yeah, and for some reason, that's right there, 25-year dividend. Sorry, I was thinking I labeled mine dividend aristocrats. It's labeled 25-plus-year dividend. Now, there's a couple stocks in here that are actually getting a little bit of a push. Those stocks, if you look at them right there, they're also broken really down by what sector they're in. Keep an eye on some of those. You'll see that in the financial space, there's some right there. You're also seeing that some of the industrials right there. Keep an eye on them. Let me go back to the quote list, go public for just a second. Yeah. So sorry. When I looked at the public list, 25 plus year dividend. Now, this class is not income investing, but if you looked at the grouping that is actually tracking those, kind of been more of a bullish move since last week. Keep an eye on that. Now, let's look at some of these examples. First off, something that we actually talked about yesterday was Apple. And that was actually when we talked about the example of the stock gapping down. Now, we've been very diligent talking about when the stock gaps down, the open of the red candle is the first line of resistance. Okay. Now, when we actually have this, if the price can get above the open of the red candle, the bears that sold or those investors who sold, well, sometimes when you get downward pressure, it doesn't necessarily mean you get that selling pressure. They announced last week, we talked about it on Thursday, they announced an increase of pricing for some of their iPads, phones, MacBooks, etc. Okay. And some investors were concerned that actually might cause a drop in sales. Okay. Now, if you've ever gone to a class on economics, you're going to hear a word called elastic or inelastic. Inelastic is really something where if the price moves maybe 5, 10, 15%, there might not be a big drop in sales. Now, I'm not going to tell you to do this, but imagine someone told you, go hide your spouse's phone for a couple of hours and see if they become outraged that they cannot find their phone. Okay. Now, when you kind of think about these technology items, phones, pads, computers, whatever, you'd say to some extent it's maybe a little inelastic, where if the price goes up, it might not necessarily collapse the demand as quickly as you think. Now, that was the discussion last Thursday. Now, what you're now going to notice is yesterday we saw the price close above that area of resistance. Now, yesterday we did an example of an entry. Then we actually set a buy stop. Then this morning we actually see the price doink to the upside. Now, what you're now going to notice is look at where the intraday price action is. Okay. So we see the price gap up and it sells off. Now, the average investor who did not listen to the class on Monday said, oh no, it's a sign of weakness. No. Okay. If we actually see intraday selling, which is usually in the morning, okay, the first 15, 30 minutes, it sells off and goes right down to the moving average. Now, if we said, what does the regret pattern look like? This is what it looks like, or a way to get regret pattern. The regret pattern is actually where the price dips down to your support, the moving average, the midsection of the candle, or the open of the previous day's candle, gets a nice bounce and leaves a long tail. Then the investor says, geez, I wish I would have gotten in. That investor has only assured one thing. They are trading on emotion and not on levels. They're actually becoming fearful of color candles more than watching the levels. If you're a technician, be a technician. Okay. Don't call yourself a technician if you're not going to be a technician. Very important. Okay. I think we made that point clear. Now, we've got to ask ourselves the question, is this trend over? Now, if we go back and really look at this, the path of least resistance, we could also, remember we talked about diagonal lines of resistance? If we look at this previous high here, and we could even maybe kind of draw, let's say, down to here, we could maybe say there's a little diagonal line of resistance touching 1, 2, 3 touches. Now, if you break the diagonal line of resistance, the path of least resistance, you try to come up to the next one. Now, this is what investors will do that are probably unsuccessful. Well, they think every day you got to come up with new stocks. That's not true. Okay, you might be looking at the same stocks day over day over day because they're still trending. Okay, now if the price went up to 301, it wouldn't be surprising. If you make in the shorter term a high, you know what I'm going to say. The greatest chances is it actually makes really a higher low. Where? Well, that higher low would really be where the last lower high was, about 287. If we stay above 287, it'd be more of a kind of bullish bounce example. Path of least resistance 301, second path, if it could get up there, 315. Now, what I'm going to do is we talked about kind of dollar cost averaging. And we kind of, I think you're kind of now thinking, geez, if people aren't practicing maybe dollar cost averaging, it's people put too much pressure on themselves to just get in a full position at once. It doesn't necessarily have to be like that. Okay. Now, what we're going to do in this is we're going to go back and we're trying to add to the position again. Now, what I'm going to do is on this chart, let's go back to the IRA right there. Okay. And what I'm going to do is I'm going to right click on this chart. Now we're going to go down to buy custom with OCO bracket. Now, James, you already had like 2 orders there. That's correct. I'm going to add that last and remaining third. We're going to go buy custom with OCO bracket. Now, this buy custom, we're going to buy at the current price level. We're going to set the target at that 314.85, which we can consolidate all of these orders. Okay. But I'll put it there anyway. The stop again is actually going to be right around the area of 268.85. And again, we can consolidate all those orders. Okay. There it is. Now we're going to go back and just add that remaining capital amount. If I check my numbers on that, it should be the remaining is about 3,500, which will give us about another 11 shares of stock. Now, here's the thing. So when we talk about dollar cost averaging, sometimes the investors that like to get in, but maybe not with a full position. You might do that when you see entry number 1, add some, or entry. If you get, let's say, a crossover or the 20-period moving average green, you might add some again. If you get the 20-period moving average or the moving average crossing, you might add again. So what you're doing is you're just dollar cost averaging, okay? If the first entry doesn't work, it's on a smaller amount, okay? No harm, no foul. I mean, if it's a foul, it just you have a smaller position. You're saying, I'll show you more capital if you show me more trend, okay? Now, data GTC, we're going to follow through on what we talked about. Now, here's what you see is we're just going to add that last and remaining amount of Apple. Give us about a $10,000 position. Click on that, and it's sitting right there. Now, so that is trade number 1. Now, the other one I want to go back to just real quick is we mentioned Amazon, which fell right down to the upward trending shorter term moving average. Now, if we go back and look at this, let's go to a 3-year weekly chart, pull this up. You're going to see that this pullback that we've had it's a pullback right to the horizontal line. Now, when are the earnings? The earnings are on the 30th. Now, if someone said to us, when is maybe the most interesting time to look at, let's say, stocks? Is it stocks like a day or 2 away from earnings? Or is it probably 3 to 4 weeks prior to? You might say 3 to 4 weeks prior to earnings is usually a little bit more interesting because you might get more speculation on what the earnings might be, causing price movement by buyers buying, knocking the price higher, or sellers selling in anticipation that the earnings might be weaker than expected or as expected. Now, what I'm going to do on this is we're going to come back to, let's say, the 1-year daily chart. And what we're going to try to do is let's kind of go back to what we mean by 1, 2, 3, right? 1, again, is just where we have the shorter term moving average going green. And I'll circle that. So that's number 1. Now, if you look at that, that is an early entry. Some investors might say, James, I don't like that entry. It's just too aggressive. If they did get in, they might say, look, I'm going to split my position up in thirds. If they normally invest, let's say 10,000, example given, that investment might only be $3,300. If they get it wrong, it's on a smaller amount of capital, smaller number of shares, smaller potential loss. Now, step 2. Step 2 is actually right there. And so right there, the very next day, notice the price. If they bought somewhere in here or anywhere in that wick, well, the price is higher. Now you're actually saying to yourself, geez, I wish it would have bought the previous day. You see what I mean? And then what you're going to notice is you get the crossover. So if the investor really bought on in the areas of those candles of 1, 2, 3, they're just building a position. So they might do a third, a third, a third. Does it have to be a third? Of course not. I'm just using the example. We talk about steps 1, 2, 3. If we do third, 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 now you might be thinking, well, James, this actually seems like the investor is following through on maybe a trend that they might be anticipating. Yeah, exactly. Okay. Now, what happens if all of a sudden you actually did that one third, one third, one third, and then today happens? Well, it's just an anticipation of why you invested or why the investor invested to begin with. Okay. Now you're trying to say, could that trend go to the upside? Now, what we're going to do in this case is we're going to imagine that we don't have a position. Okay. So now what I'm going to do is let's imagine the investor says, look, I'm not going to do a third. I'm just going to take a half. If we did a half, I'll show you that as well, buy custom with OCO bracket. Now, what we got is the current price. Let's unlock that. So as we unlock this, it's floating with the price as we're talking. What do you mean floating? Well, if you look at the price there and you look at the price here on the right-hand side, it's moving as we're talking. Now, target, let's say, for example, I'm just going to put 259 for example. We're not saying that's the high, but I'm going to mark that because that's what we see on the chart. And then underneath, we see support. Okay. Now, if you look at this, if we said, where do we see support? What has been acting like support? Is it a moving average or is it a level? Now, the moving average, we could say, yeah, we touched it. It's probably a little bit more of a horizontal line. That horizontal line is right around about 232. Now, if we take a look at this, 232 less 2%, it's going to give us 227.36. So 227.36. Dated GTC, dated GTC. Now, if we pull this up, if I go back to, let's say, the capital amount, half of a position, it's going to give us about 20 shares of stock. Noted? Okay. Now, the investor might say, well, when might the other position happen? Well, let's say today ends like this candle. Let's follow through on what we talked about on Monday and Tuesday. Well, we know going into tomorrow, if this candle actually holds, the midsection is going to be right at 241, and the open price is going to be right around, let's say, 239.6. So if tomorrow we actually come down to either one of those levels, the investor might consider buying on the dip of the price action. Just because it goes down intraday doesn't necessarily mean it's going to turn bearish. There's buying and selling, and that selling pressure could have knocked the price down and just knocked us right back down into yesterday's range and or down to the moving average / support. Now, we back this chart off for just a second and say, where was the prior high? Now, I put 259, but the prior level above that is, let's say, even 275. Okay. Now, I'm not going to go over the fundamentals on this per se, but you can kind of imagine the one thing that Amazon has done is they've never really managed their earnings per share. When there's been capital investments, they've actually just made the capital investments, even though that actually kind of, well, if you go back a couple years ago, when they had the capital investments, when they could buy their own fleet, their own airplanes, et cetera, to do the deliveries, they just did that. And it pushed down the earnings per share. They're more focusing really on revenue growth and market share, and also getting into other business lines where they could expand the revenue. Now, if we actually went back to this, and I'll just do this just really quick. If we went to analyze and then we went to fundamentals, this is going to show us through 25, okay? The numbers we're actually seeing, if you'd like to say, I would like to see the bottom line, the earnings per share is 717. So it's gone up since COVID, okay? If you look at, let's say, the sales per share, it's at 66. Now, this is per share, okay? So it's taking the revenue, sales, divided by the number of shares outstanding. Now, I just heard someone say this, theoretically. My wife or my husband is responsible for those numbers going higher. I'm a coach for investments, okay, not personal counseling. Okay, a little fun with you there. Sorry, I've been waiting to say that. Now, if we actually pull this actually back up, it's so funny, but not. Now, so we did first trade example was Apple. Second trade example was Amazon. And actually the third one, what you're now going to see if we actually take a look at this, is I'm going to also pull up Google. Now, I want to pull this up for just a second, okay? Now, if we pull this up, okay, pull this up. Now, why are we bringing this up? Can anyone explain to me why we're bringing this up. Now, Sam, I'll kind of move up the mic and let me know if that helps in terms of the sound. I could also do one other thing as well. Now, as I'm getting the answer back, why are we looking at Google? I'm going to go ahead and say confirm and send. Now, remember how this stop works, okay? It's saying this. Now, that's funny. Tech One Trade says, "Don't look behind you, JB." That is true. Okay, that is absolutely true. That's right, close the blinds. But I got to be careful. Got to be watching the door as well. Now, so here's the deal. Uh, Remember that it's saying if the stock goes to that price or less, sell the shares of stock. The risk of that is we don't know what the price is going to be at. Now, the thing is, we got to actually go back to just real quick the analyze before we look at Google. My question was, why are we looking at Google? Okay, is there any technical reason first off? Now, if we go back and look at analyze just real quick, and I want to go back to Amazon for just a second, what you're now going to kind of notice is if you look at, let's say, sometimes investors like to look at, let's say, free cash flow per share or cash flow per share. The free cash flow has actually gone down somewhat as they've made capital investments. You're also going to see if we take a look at cash flow per share, it's actually the highest it's actually really been. And sometimes when you get actually those cash flows, they could actually go out and invest in their businesses themselves or buy other businesses, buy technology. You're also going to notice that when we look at dividends per share, they don't have one. Now, the one thing when we actually take a look at this, the margins, these gross margins that they've actually had, they've actually been quite strong. Actually, their margins are better than where they've been in the last 5 years. They're 8 points higher. When we look at even the net profit margin, they're higher than where we've been. Now, it's only 3 higher, but 3 higher than where we were at 7. They're literally, 45% higher than where they were before, okay? And the same thing with operating profit margin. So the sales have actually gone up and the margins have improved. Those margins actually improvement has actually caused the earnings per share to increase. And that's what a lot of those shorter term type of traders really like. They want to see the earnings per share grow. Okay. What that doesn't necessarily always tell you is, are they making sufficient capital investments to grow their business over time? To grow it, you either use the savings, or for example, you borrow the money in terms of, let's say, fixed income, or you those are the 2 main ways. Okay. So the biggest actually thing is historically, Amazon has not always tried to have just increasing earnings per share. They've tried to use the earnings from the business to grow the business. Now, let's actually go back to, let's say, Google. Okay. Now, if we look at, let's say, Google itself, if we looked at the right-hand side, we would say, hey, it's down. Okay. Now, thank you for the audio. I just want to double check, and Sam, let me know. Now, if we go back and take a look at this, I'm just going to kind of draw a line kind of hitting these highs. Okay. Now, all of us, if we looked at the right-hand side, we would say, oh, it's terrible. Google's been down. Okay. Now, let's kind of connect this. What sector is Google in? Now, if you said, James, I don't know, where can I double check? Well, let's go back to the market watch for just a sec. Well, actually, 2 things. Number 1, analyze fundamentals. If we did this, it's going to tell us analyze fundamentals. You're going to see it's in communication services. Okay. Now, if it sounds familiar, it should. That is actually in that communication sector that we talked about earlier. Okay. And that sector is $ what? IXC. Okay. Pull it back up. What did we actually make mention of that before? The communication. It wasn't a downtrend. Thanks to Meta today, you're seeing that actually that had a pretty big push to the upside. The communications sector, where is it? And it's right here. And if on the S&P 500, it's right there. If you click on communication, the first one, there's the strongest move. Okay. Now, other names are in here as well, but you're seeing the one that's actually the strongest is Meta, then followed maybe by Google. Now, pull this up for just a second. Pull up Google. Now, the other reason why we're talking about Google is Google has now fallen down to the longer term area of support. Now, do you see that support level? Okay. Now, if we look at that support level, the old horizontal support level is right around here. Now, if we take a look at this, how do we know investors are really buying? Well, number one is they did buy up the 338 level, but maybe the investor says, look, it's in a downward channel. I don't want to get into it. We actually get above the channel. Well, today we're poking our head above that. Now, we could actually say here it tried to break out, didn't hold. Here we actually tried to break out, didn't hold. Didn't hold. You got to understand that sometimes that first one or two times might not hold, but the more time it pokes its head above the resistance, the more the investor might say it's trying to turn itself around. Now, the prior high, sometimes it can do this. We might try to swing back to the prior high. Now, what does this look like on a 3-year weekly chart of the fundamentals? We go to the daily, go 3-year weekly. This is what it looks like on a weekly chart. Kind of looks like the daily, just the candles are bigger, right? Now, what does it look like in terms of the fundamentals? Now, if we actually pull it up, analyze, now the numbers here look a little bit more like your classic fundamentals where they're just growing over time. Sales per share, think revenue, okay? 19, 21, 24, 28, 32, okay? Now, if we actually take a look at, do they pay any dividends? They don't pay any dividends. So last 2 years they do pay dividends, not a ton on terms of the yield, 60 cents, 83 cents. However, 23-cent increase on dividend in the last, let's say, almost 2 years, that's a 30% increase. So they are sharing some of that earnings per share in the form of a dividend. 561 down, higher over the 2 years. Big push, big push. Over the last 2 years, again, these are looking at the full years, that's a pretty big jump. That's almost 100% increase on earnings per share in 2 years. When we talk about the revenue itself, we're talking really about a 30% increase. Now, this just might not sound like anything, but you got to remember, you're starting from a high base to begin with. It's not like you started out with 10 cents revenue per share. Now, if we actually pull this up and we actually said, well, could we see those 26 numbers just real quick? Let's go to the quarterly, and we're seeing those numbers. Now, if we look at the quarterly, okay, the numbers we're seeing for the Q1, it was 511. What are we pulling up? Well, 511, in all of 2025, we were at 1080. If we look at the 26 number there, just for the first quarter, they were at 511. Okay, so some pretty strong numbers so far. When is the earnings coming up? That earnings is coming up on the 23rd. We're kind of inside that 3-week window. Now, sometimes you see these stocks anticipate what they think the earnings could be. Now, what we're going to do in this case, we're going to right click on the chart. Now, I'm going to kind of play that example of dollar cost averaging. What I'm going to do here is I'm going to go buy custom with OCO bracket. If we do that, what I'm going to do is I'm going to put the target right back at the prior high. Do we know if it's going to go up there? Not a clue. I'm going to put a target though. Sell if it goes to that price or higher. Now, dated GTC. Now, the question I'm going to ask myself, James, do you have a question? I got a question. Would you consider holding it over earnings? A lot of investors don't mind to hold companies that have had a history of growing sales and earnings per share over the earnings, because they're thinking that they might deliver some decent earnings as well. Thinking that doesn't mean it's going to happen. But if the company has not shown that history, and that history has been more volatile, maybe it has not hit the estimates or anywhere near there, the investor might look at that on Schwab.com and say, I'm not really uncomfortable to invest in a company or hold it over the earnings when the company has been way off what the estimates were. Go look at Schwab.com, pull up Google, scroll down halfway on the page, and you actually see what was the actual versus the estimates. Now, if we also go down to, let's say, support. Now, some people like to take the top of the channel. We're not going to take that. We're going to take the middle of the channel. Where's the middle? 344.65. Now, what we see is less 2%. It's going to give us 337.75. Now, mark that, 337.75. That is the initial stop, okay? 337. Okay, type that in. 75. Double check my number. 337.75. Okay, correct. Stop. Now remember, the stop, it's not saying we're getting out exactly at that price. It's saying That's a trigger to sell. We would need to see where the trade, where it fills. Now, Dean just joined us. Welcome, Dean. Now, trade number one, Dean, was an Apple position, adding to it the last and final of the dollar cost averaging. The second trade example we actually did was Amazon. That was shares. This is a stock class. And the third example that we actually did was Google. Okay. Now, with Google, what we're going to do is we're going to go back to that dollar cost averaging again. So I'm going to take this position, just a half position. Half position is going to give us 13 shares. If we send that position right there, we talked about the stop already, put it right there. And now we see that order right there. It does fill and the stop is underneath. Now, I'm just going to kind of mark this just real quick at maybe where the breakout level was. I'm going to right click on that chart, create an alert, and we're going to say, look, if we go at or below that area, let us know. This is not at or above, at or below. Let us know. And we're just going to try to look and see tomorrow, Thursday, can we get a little dip in the price action? Okay. So that was trade number three. Now, a couple others I just want to show, and I want to hit questions. A couple others we're going to kind of keep an eye on is we said UNH. Okay. UNH, again, one of the bigger ones in the space of healthcare, trying to get a little bounce at the prior high. Notice the old high. You make a new high, and now we've checked back after 2 days, and we're trying to get a bounce. This is what we call a trigger day. Many investors that understand kind of bounces, they might be looking for the hold above, let's say, yesterday's high, or tomorrow morning, a gap entry. Keep an eye on also Cardinal Health. That's the one that kind of people don't really look at as much, perhaps, but that's been strong as well. Now, the other one we're going to bring up is AXP. AXP, this will be kind of our last example here, but if you look at AXP, and Sam has actually talked about this a little bit, but if you look at this, that earnings is actually coming up on 724. Now, this area, when we look at this, AXP, V, and MA, and also COF, they've actually, now COF has lagged, DFS, okay, and I got to remember, that should actually work. For some reason, it's not loading. Check me on that DFS, but that should, let me just see if that's the paper money. Yeah, there it is. Yeah, the DFS. Now, what you're now going to notice is, so we said AXP, V, MA, DFS, and COF. Probably would need to include TRV travelers as well. But those are ones that kind of had your classic divergence, and they're starting to show some rotation. Now, when we pull this up, I'm just going to kind of speak to the numbers. But if we look at, let's say, the AXP example, this is really your classic breakout with a big pull. For the most part, we've actually been seeing the price stay above that 23% retracement level. That's the shortest term support level you can get for the most part. We did dip down to the 38. Some technicians with that green close above the high of the low day bounce, that's showing intraday. Some investors might say, I'm going to try to take that and look and see. Now, remember, V has already gone up. MA has already gone up. TRV has already gone up. Okay. The only DFS has gone up. Could maybe AXP, along with the industry group, move up as well? That upward movement, if we, let's say, went up to the triple top area, is right around the 368. But what are the fundamentals? I mean, the technicals were kind of, well, they struggled. If we go down to, for example, the numbers, okay, those sales per share, I mean, think about these numbers, okay, for crying out loud. 55 to 67, Sam's not surprised. 75 to 85, 96 over 85. I mean, do the math, year-over-year numbers, 96.23 over 85.22. Year-over numbers were 12% revenue growth year-over-year. And that percentage growth, that's actually, if we go back and look at it over the last 5 years, it's almost doubled, almost. The earnings per share, though, is up 50% over 5 years. 50%. Sam's not surprised. He talked about this yesterday in the chat. Now, it does also pay a dividend. That dividend is actually twice over, well, actually almost twice of where it was 5 years ago. Many investors might like that. Now, we got to wrap it up here, but I wanted to end on that because we talked about the financials.
This space is one of the areas, industry groups underneath the umbrella of the financials. And so keep an eye on AXP. We mentioned the target there, 368, showing a bounce setup right there. Some investors might just set the stop underneath 333.94. That's the lower support level, with 338.42 being the shortest support level. Now, coming up next, let's go back and just take a look at this just real quick. Don't forget to subscribe. This actually is broadcast on YouTube. Our channel is Schwab Coaching Webcast, Trader Talks. It's free to subscribe. Now, also remember that the live webcast schedule coming up next, if we take a look at this and say, what is next? It's going to be really managing an option portfolio with Brent Morse. And so again, I'd like to thank Cameron May for answering those questions in the chat. There's also a survey in the chat. Thank you ahead for filling that out. It's just simple 2 questions. And I love reading your comments. Now, remember with what we talked about here today is we talked about these 4 trade examples: Apple, Amazon, Google, and also with that at the very end, AXP. We did 4 examples. Remember, these are examples. All investing involves risk. And this has been the examples talking about growth and value. A little bit more of a focus on growth, but we did mention keep an eye on the dividend aristocrats. Stay tuned for Brent Morse coming up next. With that said, take care. Bye-bye.